markets, our futures are down. The dollar at 68.4 US cents. Crude is up in value while gold is down.
And for more on finance, I'm joined by author of the stock market newsletter Marcus Today, Marcus Padley. Good morning, Marcus.
Morning, Steph.
Well, the IMF says that the escalation of Middle East conflict poses significant economic risks. What are these risks?
Well, tell you the truth, Steph, they are risks probably in the region. For instance, the Israeli GDP in the last quarter has dropped something like 20%. But globally, it's not actually going to have an impact unless and until the oil price spikes, and that would be inflationary, and that would upset things. But the truth of the matter is war is generally quite good for the economy. It doesn't go past us, and with those of us that remember, the Iraq war started on March the 9th, 2003. And on that day, the stock market bottomed, having trended down for quite a period of time. So it's not necessarily bad news for the economy. The IMF's talking about the local region. It's also quite good for things like bonds, which is people moving into safe havens. Good for gold as well. Good for the oil price. Oil price is up from $84 to $94 and up $5 overnight. And it's also good for politicians trying to get re-elected. You might remember Margaret Thatcher's election chances getting saved by the Falklands War. It's not gone past everybody that we are weeks away from a US election and Biden is front and center, although obviously Harris is the candidate.
Absolutely. And also 45,000 dock workers are on strike in the US. Is that a threat to economic growth?
Yeah, it's the Longshoremen's Association union. They are asking for they've been offered a 50% pay rise over 6 years. They're asking for 77% and a limit on automation. And this is really the key factor. If you go and look at if you just Google Chinese ports, and you'll see they have got people sitting in control rooms with joysticks controlling the whole port. And the big threat to the American unions or port dock workers is that automation comes in and gets rid of thousands of jobs. As far as whether it affects the economy, the ports involved cover about 43 to 49% of US imports. So if they get held up more than about 2 weeks, it starts to have an economic impact. But usually these things, Steph, all these temporary effects are generally temporary. So you would imagine it is beyond comprehension that this should be let go for very long.
Yeah. And Marcus, what is coming up next week for the stock market?
Well, we're all hanging around for the US jobs numbers tonight. The focus from the Fed has gone from inflation. They're assuming it's conquered to jobs. So the jobs numbers tonight, if they're weak, it might kick off some recession fears, which wouldn't be good for the equity market. And then next week, the main event is going to be the start of the US results season, which starts on Friday with the big investment banks.
Okay, Marcus Padley, thank you so much for all of that and the update on finance.
Thanks, Steph.
The South Australian Police Commissioner